Hello and welcome back to another video. In this video I'm going to be sharing with you the top 12 high yield dividend stocks that I'm watching in 2020. All of these stocks are available on Trading212, but you will need to check if they're available on your platform. Everyone will have their own opinion on where a high yield dividend stock begins, but I personally feel anything over 4% is high yield. A high yield can reflect a company's mature status. When a company matures, it may have few profitable growth investments left and returns a large portion of its cash flow to shareholders as dividends. On the other hand, high yield could be a trap where the company isn't performing well, so I recommend that you do your own research. So here are the companies I've been watching. If you have been following my journey, you may notice that I already own some of these stocks, but I do plan to try to add them all in this year. They've all increased their dividend payout for at least 5 years and all offer over 4% yield. So first up we have ExxonMobil. It is in the energy sector. It currently has a dividend yield of 5% and has a dividend growth streak of 36 years. ExxonMobil is one of the largest and oldest oil companies, being founded in 1870. One of ExxonMobil's greatest strengths is its scale. It has total production of over 4 million barrels per day. This helps it achieve lower costs, and with its diversified cash flow, it can ride out energy cycles better than most of its rivals. Exxon has been paying dividends since 1882 and has increased dividends for more than 25 years, giving it aristocrat status. Next up is Verizon. It is in the communications sector. It currently has a dividend yield of 4.1% and has 13 years of dividend growth. Verizon is one of the largest wireless services providers and in 2018 was the most profitable company in its industry. Verizon's moat is in the form of a large subscriber base and valuable telecom spectrum, and is at the forefront of developing 5G wireless technology. Having invested in its network, it has managed to score the highest in wireless reliability, speed and network performance compared to AT&T, Sprint and T-Mobile. Verizon has also bought Vodafone's remaining 45% stake in 2014, AOL in 2015 and Yahoo in 2017. Analysts expect Verizon's dividend will likely continue growing by 2 to 3% per year. Next up is Duke Energy. It is in the utilities sector. It currently has a dividend yield of 4.2% and has 13 years of dividend growth. It was founded in the early 1900s and has become a very large electric utility with 7.6 million electric customers and 1.6 million gas customers. Earnings come from regulated electric utilities, a fast-growing gas infrastructure and utilities business, and a commercial portfolio of renewables. Duke's customer base has grown on average by around 1% per year and has earned a consistent return on equity of 9 to 11% in its regions. Duke Energy has been paying dividends quarterly for over 90 years, with dividend increases annually for 13 years. Number 4 is Dominion Energy. It is in the utilities sector. It has a dividend yield of 4.5% and has 16 years of dividend growth. Dominion was founded in 1909 and provides electricity and natural gas to more than 5 million customers located primarily in the eastern United States. Dominion acquired CoStar in 2016, which improved its scale and diversification. Around 90% of its operations are regulated, generated stable earnings and returns on invested capital. Dominion has increased its dividend annually since 2004, and analysts expect it to grow annually by around 4% whilst it improves its balance sheet after the recent acquisitions. Ventas is in the real estate sector. It has a dividend yield of 5.6% and has 9 years of dividend growth. Ventas is one of the largest healthcare real estate investment trusts in America. It has a portfolio of almost 1,200 properties comprising seniors housing, medical offices, specialty hospitals, life science, and acute care hospitals. Ventas is well positioned to continue growing with the demand for healthcare and senior living services rising with the ageing population, and also healthcare spending is expected to grow 5.8% annually until 2024. Due to its well-diversified portfolio of healthcare properties and one of the strongest balance sheets of any REIT, Ventas has been paying dividends since 1999. Number 6 is Philip Morris International. This is one of the ethical stocks that you have to choose whether you're willing to invest in it or not. It is a tobacco industry stock in the consumer staples sector. It has a current yield of 5.5% and has 10 years of dividend growth. The company was made in 2008 after Altria spun off, creating Philip Morris, which is now one of the largest tobacco companies in the world, supplying over 180 countries. Philip Morris has more than 150 million consumers worldwide and owns 6 of the world's top 15 international brands, including Marlboro, which is both the company's and the world's number 1 brand, giving it a competitive moat. Dividends have increased every year since it began in 2008. Next up is Main Street Capital. It is in the finance sector. It currently has a dividend yield of 5.7% and has 7 years of dividend growth. Main Street Capital is an investment firm that provides long-term debt and equity to lower middle market companies, supporting management buyouts, recapitalizations, growth financing, and acquisitions. It has paid a monthly dividend since 2007. In the last 5 years, the dividends have increased by 4% annually, and it has never cut a dividend. It also includes extra semi-annual payments, which further boost income for investors. Number 8 is Enbridge. It is in the energy sector. It has a current yield of 6.2% and has 23 years of dividend growth. Enbridge was founded in 1949 and is involved in gathering, storing, processing and transporting oil and gas across some of the continent's most vital energy producing regions. Enbridge acquired Spectra Energy in 2016, making it one of the largest natural gas utilities in Canada. Enbridge has increased its dividend for 23 consecutive years and is expected to have 5 to 7% annual growth. Number 9 is Enterprise Products Partners. It is in the energy sector. It has a current yield of 6.7% and has 20 years of dividend growth. EPD is one of the largest integrated midstream energy companies in North America, owning around 50,000 miles of pipelines. The firm also owns storage facilities, processing plants, and export terminals. It has long-term transportation contracts and a base of blue-chip customers such as BP, Chevron, Dow Chemical, ExxonMobil, and Shell. It has increased its dividend annually since 1998. Number 10 is Brookfield Renewable Partners. It is in the utilities sector. It has a current yield of 4.5% and 7 years of dividend growth. Brookfield is based on owning and operating renewable energy power plants with over 100 years of experience in power generation. Its competitive edge is based on its large portfolio of assets located across growing countries. Brookfield has predictable results thanks to its 90% of cash flow being contracted for the next 15 plus years. The potential for growth in the renewable energy space is exponential, with 80% of all US power expected to come from green sources by 2050. Number 11 is Iron Mountain. It is in the real estate sector. It has a current yield of 8.1% and 8 years of dividend growth. Iron Mountain is a real estate investment trust that stores and protects all sorts of information. It was founded in 1951 and now has more than 220,000 customers. Iron Mountain has more than 1,400 facilities comprising more than 90 million square feet. It has an average customer relationship of over 50 years, with over half of its boxes still in storage from 15 years ago. The company is now expanding into emerging markets in Europe, Asia and Africa, and into new businesses such as data centres and auxiliary services. If you are comfortable with the risk profile, you could enjoy its high yield, which analysts expect to grow by over 1% annually until its balance sheet improves. Last up is STAG Industrial. It is in the real estate sector. It has a dividend yield of 4.45% and 9 years of dividend growth. STAG Industrial went public in 2011. It owns around 4,000 industrial properties over 38 states in America and has over 350 tenants. Most of its single tenant properties are warehouses, distribution centres and light manufacturing facilities. STAG is a monthly paying stock that I plan to add to my portfolio very shortly. I'm not saying that this is all the stocks that you should be looking at. This is just stocks that I'm personally watching this year and plan to add to my portfolio. I hope you've enjoyed this video, and if you haven't already, please hit the like button and subscribe to the channel.